So our agenda for today is building bias, dealing ranges versus refined dealing ranges, identifying reversals, trading FOMC, and ultimately A+ macro trades. So let's get into it and go right to the daily chart. As you can see here, this is NASDAQ NQZ 2025. And first, I want to mention a few main points and simple points to kind of lay the higher time frame narrative and establish foundation, understand context. So first and foremost, on any trading day, when I'm trying to determine my daily bias or my bias for the weekly candle, plain and simple, I want to look at the higher time frames and identify a clear trend. So as we can see here, the trend is clearly bullish. We've taken out all-time highs and the market has been strong. Now, after that has occurred, I want to identify the clearest dealing range. Okay, so for our dealing range low, we see that's right here. And why is that our dealing range low? We have this low and this one that were swept before this expansion higher. Now we're seeing a retracement. Okay, so a note on this, if you see price, and this is post FOMC, which of course we are going to break down as I mentioned, price is quite far away from 50% of this clear daily dealing range. Now, when the market is at all-time highs, when the market is strong, it's not going to spend a whole lot of time in retracement, or in other words, it's not going to come down to discount of the higher time frame, larger dealing ranges. So we need to be able to understand how we can identify and correctly anchor refined dealing ranges utilizing the lower time frames, which, as we'll look at in a second, will be the 4-hour time frame. Okay, so we've established a bullish trend. We've established a clear dealing range on this daily chart, but we want to go down to the lower time frames and see if we can identify that clear refined dealing range. So on top of this, what do we see here? We have 2 consecutive daily BISIs, which will be important as we progress throughout today's lesson. And more so, note this volume imbalance right here. This is a previous new day opening gap, which again, we will revisit later in this video. Okay, so let's go to the 4-hour time frame. And now we're going to break down how we can identify our refined dealing range. So as I've mentioned on this channel before, as I've mentioned to you guys in Discord or trade reviews, analysis, etc., typically for a refined dealing range low, I'm looking for a clear swing low, which has the same criteria as a normal dealing range low when we have a sweep and then expansion. Now, as you see here, this is my dealing range low. Now, why is this my refined dealing range low? It is anchored to previous week low. So yes, we can monitor levels and more specifically 50% levels of these refined dealing ranges when we have that swing low, sweep, and expansion, but we also need to be aware of time-based dealing ranges. So again, we're using last week's low right here. We opened and then just started to expand last week, which was very, very nice. And the high made right here, which is all-time high currently prior to the retracement, okay? And to reiterate, we need these refined dealing ranges because when the market is strong and trading at and around all-time highs, it's really more likely that it's just going to refer to these EQ levels prior to expanding higher and making the next leg higher to buy side, to premium objectives, and ultimately all-time highs. So again, this is the 4-hour chart. This is post FOMC. What do you see price did? It opened, came down right around a little coloring outside the lines, which again, we're going to break down even further, into that EQ or 50% level at 24,268.75. Okay, now again, let's progress forward. What do we see? We're still on the 4-hour time frame, but note that 50% level of the dealing range that we first identified from the daily time frame is right here. So see how price comes here and then that larger time frame equilibrium level is all the way down here, right? There's quick math, a 300-point discrepancy or so from each of these levels, right? So all that to say, ask yourself, what would be the stronger scenario considering the market has been very strong come down to EQ of this refined range and give us reversal signatures, or bleed all the way back down here and then give us the reversal signatures. It would, of course, be the higher one, right? Because we don't want to see price spend a whole lot of time in a discount when we're anticipating higher prices, when we are anticipating bullish continuation. Now, on top of everything we've laid out here, price comes down into this EQ level of the refined range below weekly open for this current week, and we get an SMT with ES. So already just looking at this 4-hour time frame, this is literally textbook on what you want to see in general for reversals, but especially it's a great example of how we can identify refined dealing ranges and why they are important, right? Because if we were waiting for price to get all the way down here, we wouldn't be able to execute on an opportunity at this level. Okay, so let's go down now to the 1 minute time frame. Okay, so keep in mind all of that higher time frame context, the higher time frame narrative and framework that we just laid out there. That is still important, as always, prior to operating on the lower time frame, which for me, 95% of my trades are taken on the 1 minute time frame. Okay, so as you guys are probably familiar, ICT has mentioned that FOMC is a 2-stage event. Stage 1 is typically from 2 to 2:30, and then stage 2 is 2:30 and beyond. Okay, now stage 1 is typically going to be the false move. Of course, it's not every time you see stage 1 go one direction, and then stage 2 guarantees a reversal. But when you have an understanding of that profile, you have an understanding of that framework, then you combine technicals, things like drawn liquidity, engineered liquidity, reversal signatures into that profile, you get a really good idea on what is occurring. So already, look at what occurs here. Stage 1, we go a little higher, but ultimately the move is lower. We retrace back to EQ of this range here of stage 1. We go lower again at the start of 2:30, so stage 2. Okay, now you can see my annotations here. Stage 2, 2:30 to 2:50 p.m. Eastern Time. Why am I selecting 2:50 p.m.? Because 2:50 is the start of a macro, the 2:50 to 3:10 p.m. macro. And for those of you who are familiar with my channel, this, as you guys know, is when I am looking to operate, when I am looking to execute on my trades, because I want time on my side as well as price. Okay, so let's go even further and dissect this down to a trade execution and see how we could have caught an entry utilizing everything we have laid out here. Okay, so same fractal of price and macro power 3 checklist. This is what we're looking for on a daily basis. We need a clear draw on liquidity or bias. We want a sweep below macro opening price, MO. And lastly, for the entry confirmation, we want a macro change in the state of delivery. Okay, so when we have these three things aligning, and this checklist is in alignment with the higher time frame narrative, the higher time frame direction, this is when it becomes extremely favorable. Okay, so again, let's kind of walk through what occurred in stage 1. 2 p.m. opens during stage 1, and we go higher and we go lower. Now, we didn't mention when we had the previous stage 1, stage 2 graphics on this chart, what was the high of this stage 1 doing, right? And this is an important question to ask yourself, not only on FOMC day, but on any day that you're looking at the charts. When we move lower, look at the high of that range and say, okay, what's the argument for us getting back up there? Well, number one, what has the higher time frame direction been? Bullish. So we want to take trades on the lower time frame in line with that higher time frame bullish direction. Number two, this high, the high of stage 1, what is it falling short of? AM session high, London high, so double session liquidity. And you guys should go back and look at where previous day, so yesterday is Tuesday, PM session high is relative to this. It's super close. So you have a bunch of magnets for price up here, as well as a first presentation fair value gap, which if we can identify manipulation being likely over okay, and it's time for distribution, then these first presentation fair value gaps become a strong draw on liquidity. And if you guys want a deeper video on that, let me know in the comments. Okay, but ultimately, again, do we have a clear draw on liquidity? Yes. You have a high here, multiple session highs, and those highs, importantly, are in line with the higher time frame direction. We go lower, we retrace, we build this high at the start of the stage 2, 2:30 p.m., and then we progress lower, and then boom, we enter the macro. So right here where my cursor is, you can see dragged out MO. Again, that's macro opening price. This is when I'm looking to operate, and I'm really, really focusing on what the algorithm is doing, okay? So for macro power 3, again, now that I have a clear draw, I need to see manipulation, or in other words, a sweep below macro opening price. So randomly, and I say that as a joke, of course, right at the start of the macro, price swoops down and runs this low, okay? But look at what else is occurring. We're going down into equilibrium of that 4-hour refined dealing range. So now we have returned to a discount, okay? Over here, when we made this low and we start to inverse these 3 1-minute fair value gaps here, a lot of traders probably got trapped right here, okay? But we hadn't reached a discount of that 4-hour refined dealing range that we've established yet. So the more likely scenario is that this low falling short of that equilibrium level is suspect. Or in other words, it's more likely and more, it's wiser for us to want to wait for that to be swept and for the next macro before looking for any entries. Okay, so again, we see price go deliver to that level. We see macro open, sweep below macro opening price. We have the 4-hour SMT with ES as we've established. And where are we going? Okay, we're going into a key reference point. But what is that key reference point? A previous new day opening gap. Okay, and this is what we mentioned. I told you guys to remember at the start of the video. This is that daily volume imbalance, okay, right here. So, of course, it's just still semantics, tomatoes. This is still a new day opening gap. And look at what price is doing. During a time window, so the macro window, 2:50 to 3:10 p.m. Eastern time, it is delivering to and respecting this new day opening gap. So this is the epitome. This is a prime example of time meeting price, of time aligning with price, and these lower time frame signatures aligning with the higher time frame direction. Okay. Also note CE or 50% of this. Look at the bodies. Respect that right there. This is a 1-minute candle. 2 bodies right there. Look at that. Do we wick below? Yes, that's fine. But we're respecting that 50% level. And again, guys, all of these key reference points are charted with the indicator for you. So once you know how to use these levels, your only job is to wait for price to tell you, okay, it's time to take a trade. And if it's not, you don't do anything, right? So the indicator plots the new day opening gap, not only of the current day, but the last 5 days. It plots, as we see here, kind of fast forwarding, first presentation fair value gaps, the 1:30 fair value gap, the 9:30 fair value gap, the midnight fair value gap. It plots these session highs and session lows for you, key opening prices, macro SMTs as well, macro open, macro windows. Everything is charted for you automatically, so you don't have to spend your time ahead of a trading session and or during a trading session, putting your focus on just marking things up on the chart, right? It's already there for you, so you understand where key liquidity is, where key opening prices are, where the new day opening gap or the new week opening gap is, et cetera, et cetera. Okay, so again, we're going below macro open, and we're starting to see the macro power of 3 checklist be met. We have a clear draw, as we have established. We have a sweep below macro open. Now, all we're waiting for is macro change in the state of delivery. Okay, what does that mean? You have a SIBI right here or a bearish fair value gap. We go down, respect the new day opening gap. We displace and close above the macro inversion. This is my entry right here. Price should spool higher, right? That is a change in the state of delivery. If you note on the sell side of this curve, price was respecting what? Inefficiencies, premium of this dealing range in general, up close candles, this SIBI here, right? This up close candle, retracement once more. Then we go lower during macro for the manipulation. If we were to continue lower, Would we want to see price close right back above that bearish fair value gap? No. So this is a change in the state of delivery. And this lower time frame signature is significant to us because of the framework that we have laid out in tonight's lesson up to this point. Okay. And if you're new, it seems like it's a lot of work, that it's tedious or overkill. But as you progress and as you gain more experience with these signatures and how to apply them, it'll become second nature to you. And it doesn't have to be this whole in-depth thing or overkill, again, as I've mentioned. So again, we see that close above, then price just spools higher, right? And not only with the trade entry and the execution, how can we manage this trade accordingly and just anticipate a specific type of delivery? So what I'm doing after an entry, I'm looking at the left side or sell side of the curve and looking at fair value gaps that push price down and first presentation fair value gaps, as what I refer to them as roadblocks. So we want to see price close above these roadblocks as a sign that A, we're on side, and B, if we do get a close above, I want to see any retracement to these roadblocks support price and push us higher for the next leg. So what do we see here? You have this fair value gap that initially pushed price lower on the sell side of the curve. We see the reversal signatures. We close above. That becomes a high probability inversion. We open, we wick down into it, look at the bodies, respect that, and displace away. Additionally, look all the way back here. This is the first presentation fair value gap at 130. Okay, drag that out after we're in the distribution phase, after stage 1 and stage 2 manipulation. We close above, we get higher here. So we close above actually the 130 fair value gap right here. We expand real close here, but ultimately we still fall short of this high, and we see a retracement. And where does price go? Right down to that 130 fair value gap, right? Wicks there once more, and then we see expansion higher, okay, making the next leg and finally getting to the 930 fair value gap and ultimately this high, okay? So there's a lot to break down from today, but this is ideal delivery to and through from start to finish, okay? You have higher time frame trend on your side. You have clear manipulation for stage 1 and stage 2 of the FOMC event against that higher time frame trend, which is what you want to see. Then your job as a trader is to just wait for price to go lower and give you your entry criteria, which is ultimately a reversal entry right here after we deliver to EQ of the 4-hour dealing range, after we see the 4-hour SMT with ES, and then these lower time frame signatures are extremely likely to pan out. Okay, so I hope you guys enjoyed this video. I would appreciate a like. I would appreciate a sub if you're not already. It's been a while since I've posted some lessons here on YouTube. I've been working on a lot of other stuff, but the next wave of lessons is on the way, so there'll be more teachings in the near future. If you guys have any questions or comments on trading, on how your trading has been, on FOMC in general, let me know in the comments, and I'd be happy to get back to you. And yeah, guys, hope you guys enjoyed, and I will talk with everybody soon.